All right, welcome to The Explainer. Now, let's get one thing straight right away. This isn't a guide on how to file your taxes. Nope. Instead, we're going to go on a journey to understand the actual structure of the system itself. We are pulling back the curtain on this incredibly complex machine we call the income tax code.
You know, it seems like a simple question, right? But the answer takes us through this fascinating, super intricate legal landscape. That one single rupee, it has quite a story to tell. A story all about rules, definitions, and a whole lot of procedures.
So, let's do it. Let's start following that one rupee. We're going to see exactly how the system is designed to track it, how it calculates what's owed, and how it makes sure every single step of the process is followed to the letter.
Okay, so our journey starts in what we'll call Act 1. This is where we lay down the absolute fundamentals. See, before a single rupee of tax can be calculated, the system has to answer three very basic questions. When are we counting? Who are we counting? And what exactly are we counting? First things first, we need a time frame. The journey of our rupee is measured inside what the code calls a tax year. Clause 3 of the law lays this out. It's the official window, usually the financial year, where all your income gets added up and all the rules get applied. Think of it as the starting line for this whole race.
So, we've got our time frame. Now, who's actually in the race? Well, Clause 6 answers that with the idea of residence. And this is absolutely critical. It's not about your citizenship. It's about your physical presence in India during that tax year. That one factor, where you were and for how long, determines if your rupee even has to play by Indian tax rules at all.
And finally, the what. What are we counting? Clause 5 calls this total income. You should think of this as the absolute top-line gross amount. It's the very starting point for our rupee's journey. It's all the income from basically every source you can imagine that has a connection to India. This is the big, unfiltered number we start with. Okay, so we've nailed down the what, the who, and the when. Now we head into Act 2, the great calculation. This is the really interesting part. This is where that huge total income number gets refined, chipped away at, and transformed into the final number that you're actually taxed on. The logic here is actually pretty straightforward. It's all about subtraction. You start with that big gross income number. Then, the law lets you take out specific types of income that are exempt. After that, you get to subtract certain approved deductions. Whatever is left over at the very end, that's your total taxable income. So what are these deductions anyway? Well, Chapter 8 of the code is full of examples. You can think of them as expenses or investments that the government wants to encourage. By letting you deduct stuff like insurance premiums, retirement contributions, or even donations, the law is basically rewarding you for doing things it sees as beneficial. And the best part? It lowers your final taxable income. All right, so our rupee has been identified and the taxable amount has been calculated. So what now? Well, welcome to Act 3, the administrative maze. This is all about the paperwork, the procedures. It's where everything gets officially declared, filed, and processed. This whole process is designed to create a clear, official paper trail. Chapters 15 and 16 lay it all out. Step 1, you need a PAN. That's your unique ID number. From there, you file a return of income. That's your official statement. Then you do a self-assessment to figure out what you owe. And finally, the tax authorities might do their own official assessment, just to double-check everything. The system also has some really specific rules just to make sure things stay transparent. Take Clause 186, for example. It sets a limit on big cash deals. You generally can't receive 2 lakh rupees or more in cash for a single transaction. It's a perfect example of how the code isn't just about the math, it's about governing how money itself actually moves through the economy. So, this whole journey for our rupee, it's not just about simple math and filling out forms. It's also about navigating this incredibly sophisticated set of rules designed to keep everyone playing fair. And that brings us to Act 4. To stop people from gaming the system, the code has a really powerful tool called GAR, the General Anti-Avoidance Rule. You'll find it in Chapter 11. It specifically targets something Clause 179 calls an impermissible avoidance arrangement. Basically, this is the system's watchdog. It's on the hunt for any deal that has no real business purpose and was created only to get a tax break by finding a loophole. It's literally how the code polices itself. But what happens when things don't go smoothly? When there's a disagreement or a mistake, or even a deliberate attempt to break the rules? Well, our rupee's journey now enters its final act. What happens when things go wrong? Look, if you disagree with what the tax authorities say you owe, the system has a very clear path for you to dispute it. Chapter 18 lays out what's basically an appeals ladder. You start at the first rung with the Commissioner of Appeals. Still not resolved? You can climb up to the Appellate Tribunal, then the High Court, and in some really big cases, all the way to the Supreme Court. It's a very structured way to get a resolution.
And this is where the code makes a really, really important distinction. It's right there in Clause 439. It separates underreporting from misreporting. Think of it this way. Underreporting could just be an honest mistake, right? But misreporting, that implies you were deliberately trying to deceive them. The key difference is your intent. And that one little thing completely changes how severe the penalties are.
And just like that, our rupee has finished its long journey. It started as a simple unit of income, and now, after passing through this incredibly complex and structured system, it's become a component of the nation's revenue.
You know, the whole architecture we've just walked through, from defining income to calculating the tax, all the procedures, the anti-avoidance rules, the appeals process, it can seem insanely complex. But all of that complexity, every single piece, serves one clear purpose: to build a system that is structured, predictable, and most importantly, enforceable for absolutely everyone.
So the journey of that one little rupee really shows us a system with incredible detail and logic. It's a cornerstone of our entire economy, which leaves us with one final thought for you to chew on. Now that you've seen the journey from start to finish, what's the one rule or one step that you think could be changed to make this whole essential process just a little bit simpler for everyone?